Good afternoon. This section of hotel asset management is on the managing and planning of capital expenditures. A large part of this subject is going to include the relationship between the asset manager and the facilities chief engineer. Now, what do we mean by capital expenditure, or what is more commonly referred to as CapEx? We'll be referring to it at this point on generally as CapEx. There are no clear-cut definitions as to what is or is not a capital expenditure. However, there are general guidelines to follow, which I'll be introducing here. Different business entities will have their own definitions on what is or is not a capital expense, but there are consistencies that are shared within businesses. For example, first, a capital expenditure, generally speaking, is going to be a large purchase item, typically over $1,000. Now, some building operators will have definite values above which anything is a capital expense, meaning anything over $1,000 is CapEx, or anything over $2,000 is CapEx. And there are pros and cons to this approach, but in my opinion, there are too many cons associated with this, many more than the pros on this. Primary one being is a tendency to classify as non-capital items, to classify non-CapEx items or non-capital items as CapEx items, which is something that I'll be discussing in more detail briefly here in the future. Now, in addition to large purchase items, CapEx can also be referred to for building renovations. Building renovations are CapEx. Large equipment replacements, or any equipment replacement is generally speaking a CapEx items. Repair items do not fall under CapEx, but instead go to operational expenses. And every care should be taken to not include repair items as a CapEx item. CapEx items generally have a minimum life associated with them. Minimum life expectancy of 5 years or longer. For example, a carpet replacement every 7 years is a capital expense, whereas if the same carpet is replaced every other year, that is not a CapEx. That is a maintenance item. That should also be an indication that there's a problem if you're replacing a carpet every other year. So if something that would normally be considered a CapEx item ends up being replaced with greater frequency, that is an indication of poor quality equipment or poor quality maintenance, and would require investigation to correct deficiencies instead of dumping more money endlessly or needlessly into capital purchases. So back to that carpet example. The carpet being replaced every other year, well, there's something wrong with that situation. It needs to be investigated and corrected. Find a remedy for that. Because normal carpet replacements are going to be every 7 to 10 years, and they are CapEx items. Now, let's speak about the maintenance of capital equipment versus long-term investment. The line between general property maintenance and long-term investment is often quite blurred because of the different objectives that are found between the owners and the operators. For example, building owners are going to see both capital and operating expenses as detracting from their as detracting from their financial returns, especially if they're not managed well. So owners see capital and operating expenses as a minus on their financial return. Now, key to remember that. Facility operators, on the other hand, are typically held accountable only for the operating expenses and do not have the same level of motivation or discipline for CapEx. Primarily this is because of management bonuses and incentives are typically set to net operating income and profit, which is affected by operating maintenance expenses, but not CapEx. So your maintenance expenses on the operations line are affecting your net income or the profit level, but the CapEx is not. That comes under a different budget. Owners, therefore, are going to prefer having the expense included on the income statement to gain the immediate tax advantages over it. Now, furthermore, capitalizing of normal maintenance expenditures has 3 prime disadvantages to the owners. The first, as we just discussed, the owner's income tax liabilities are accelerated by the deferral of the expense. That is, instead of the operator following established guidelines on CapEx items, the maintenance items are capitalized instead of being included as part of the monthly budget line item for maintenance repairs, thereby keeping it off the monthly budget statement and showing an artificial increase in net operating income, thereby increasing the owner's income tax liability, their immediate income tax liability. Second, the facility operator may steer the owner toward making low priority renovations and replacements rather than conserving monies for CapEx, conserving monies in the CapEx reserve for the essential improvements it is intended for. For example, a hotel operator may attempt a capital expense at replacing some lobby furniture prematurely, instead of reupholstering as an operational maintenance expense. Generally, lobby furniture has an expected life, and full lobby renovations are pre-scheduled at regular intervals. You will see every 7 to 10 years a refresh of lobby furniture. Replace all of it. If you replace it early, if you're accelerating the capital purchase on that prematurely and just doing partial replacements on it, you're changing priorities, which does have a negative effect, within the budgetary items. And I'll explain that a little bit more with another example. Actually, furthering this example, replacing some of the furniture prematurely, where it can be repaired under regular maintenance, it's the incorrect use of capital. This leads us directly to the third disadvantage. The facility operator or manager may be tempted to boost the short-term annual profits by cutting corners on PM or deferring maintenance until the expense becomes so large that it must be capitalized. An unscrupulous operator may determine that they can boost monthly and annual profits by eliminating regular preventive maintenance, say, for example, on HVAC equipment, and instead allow the equipment to fail prematurely, possibly many years before the expected life, and move up the time for the CapEx replacement. You're moving up the CapEx replacement schedule. This is the reason why a strong asset manager, well-versed in property operations, is vitally important to both the owners and the operators.